Welcome to the Transparent FX Academy. I'm Nick and I'm a top order trading view with over 190k reputation points. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting to the upside a quite strong historical monthly support and demand area. In fact, what we can notice is that from here, all these rejections to the upside were created every time the market was testing this exact same level of demand and support. It was rejecting it to the upside in every single occasion, apart from one time when it broke out to the downside and immediately broke back above, confirming this move to the downside as a fake breakout. And after that, the market has continued respecting this level as historical monthly support and demand, as institutional buyers have been stepping in every time the market reached this level. And we will be speaking about institutional buying in just a few moments when we move to the commitment of traders analysis. But for now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, what we can notice is that we had a perfect inversion of trend. If we follow the movements of this market, we went from creating lower lows and lower highs to then having a double bottom created exactly at this zone, and then the market switched to creating higher highs and higher lows. And in a situation like this, more bullish price action could be expected away from this strong weekly, important in this case, demand and support zone. Now, which zone am I speaking about? I'm speaking about this area here. Now, why is this area here so important? Well, first of all, it was the previous level of supply and resistance from which all these rejections to the downside were created. And secondly, in this case, it is also a confluence of demand and support zone, because what we know is that after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse zone. And if we do that, we can notice at 0.32 and 50% retracement areas, which are lining up perfectly with this previous resistance turn support. So this box here is actually confluence of support in which we have the 0.32, 50% retracements and this horizontal level of structure, which was previous resistance and is now turned support. So there are multiple layers of support in the same area of price, which means that there are many traders looking at these levels. And inside of a confluence of support zone, there is an increased probability of seeing institutional buying. Again, we will be speaking about that in just a few seconds. Dropping down on the daily time frame, what do we see? Now, here on the daily, we can see that already the market had shown a reaction to the zone when it approached it with this very strong bullish momentum. Immediately, the market rejected to the downside. Now, fueled by this very strong bullish momentum, the market managed to break above that zone. So now this area, as we have already identified, is strong monthly and weekly, mostly weekly demand and support. Confluence of demand and support. So if the market here will now approach the zone, there is a very good probability of seeing more institutional buying. Now, why do I say more institutional buying? Because if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data for the euro, the first thing that we have to keep in mind is that if we are looking at the data for the euro, we're actually already looking at EURUSD because all currencies on the spot are traded against the USD. And we can notice how with the last report, net positions have risen from 65k to 75k. Actually, if we look even a few reports in the past, we can see how we went from 51.1k all the way up to 75.7k net positions. So we had a huge increase of net positions, with now tens of thousands of shorts getting closed with the last report and 183 longs getting opened, bringing the total positioning from an institutional perspective on EURUSD to 196k longs compared to only 120k shorts. So clearly institutions have been fueling this massive rally to the upside. So there is definitely the possibility, now that the market has corrected, that institutions could be adding even more longs inside of this area. So in a situation like this, what would I expect? Well, as usual, trading in general is reactive and not predictive, as my students know very well. The monthly, weekly, and daily timeframes, combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this strong confluence of demand and support zone. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.